Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Everyone, this is Kathy. Good morning. Good morning. I'd like to start with the sound check. If you can hear my voice, see my screen, let me know. Please say hello into either the YouTube live stream or, on X, wherever you're coming through. Please say good morning, say hello. This is a very busy trading week and there's a lot to talk about. So I want to make sure that you guys can all hear me loud and clear. I want to raise my seat a minute. Good morning, Cheryl, Andrew, Joe, John, Stephen. Good morning, everyone. Welcome to our Monday caffeinated market buzz. I've got my cup of coffee. Hopefully you do as well. To talk about everything that is going on in the markets. Before I begin, while everyone's kind of streaming in, I always like to find out what you guys are all trading. Are you jumping into this rally in gold? Are you riding the moves lower in currencies? Are you trading indices and scalping the up and down volatility? Let me know what you're trading so we can make sure that we talk about all of it. Let me know in the chat box. I always like to hear from all of you to make sure that, okay, Eurodollar, currencies, SPY, shorting dollar yen. Yeah, we'll talk about all of that. Pound yen, you've got some big kahunas if you're shorting pound yen. That's a pretty volatile monster. One of the interesting things is pound is one of the only currencies that is not down today, which is shocking considering that it is what we call risk currency, which normally falls when the market drops. Euro, you've got some nice moves in Euro. And we've got some interesting stories that are happening in Euro as well. Okay, very good. Sounds like we have a lot of currency traders here, which is fantastic. All right, so let's go ahead and talk about what's going on in the markets. I like to always start whenever we do our VIP live streams, we always start with looking at what's kind of taking a step back. Looking at what's going on in the markets in general. And I think it would be a good opportunity to just kind of look at, what's happening today before we dive into talking about what's happening this week. So let me go ahead and share my screen. So you can see here, this is just Aussie dollar because I was just looking at it. But if you look at my upper right-hand corner here, this is my watch list. And you will see that Dow futures, stock futures are down across the board. U.S. Treasury yields are also down across the board. Gold is up over 1%. And currencies, you look at currencies, you can see Euro's down, dollar yen's down, dollar Swiss is up, dollar CAD is up, pound is flat, Aussie and Kiwi are down. So for the most part, the US dollar is up against all of the major currencies except for the Japanese yen. So, I'm going to ask you guys a question to see if you're paying attention, and just to see, just take a wild guess. In what situation do you think that the US dollar would be rising at the same time that US yields are falling? Why is the dollar rising when US yields are falling? If you follow our stream often, I talk about, and I'm putting up the dollar, this is the dollar yen chart, and I'm going to put up 10-year treasury yields. Just take a wild guess. There's no wrong answer. Why do you think US yields are, and we turn this to blue, falling, and yet the dollar's rising? Because aren't they supposed to move in the same direction? Isn't this what you tell me all the time, Kathy? I don't know why it's not letting me turn the color here. But anyway, you can see this is a daily chart, that this relationship is supposed to stand the test of time. where we have, and it does today actually. I mean, dollar yen is falling and US yields are falling, but we have dollar. Let me remove the drawing. It's also supposed to have a strong relationship with dollar Swiss and dollar CAD. And yet, today you can look and see that the dollar is rising and yields, which is the purple line, is falling. So why in the world would this happen? In what situation? All of you are so smart. You're giving me all the right answers. And I love that because it means that you're getting it. You're paying attention. I'm going to pin this, Stephen Denby and Denise, who are all saying it's risk off, US dollar safety, Quanali, yes. What's happening is it's US dollar safety, but it's actually a little bit more than that. It's US bond safety. US bonds right now are yielding 4%. So if you think about it, people worry if they're even going to get positive return this year in the stock market. So if they're worried about whether they're even going to get positive return in the stock market, yet they're kind of assured that they're going to get about 4% in the bonds market. If you were an investor, where would you put your money right now? In stocks or in bonds? Once again, no wrong answer. You guys are all giving me good answers, but there's no wrong answer. Do you think that if you had money to put into the market right now, or would you think it's better to put it in stocks, or it's better to put it in bonds yielding 4%? I'm seeing bonds from another mutant, bonds from Powell, bonds from DG. Someone's got to say stocks because with dollar cost averaging, if you keep on buying, eventually it's going to go up, right? But yes, logic says before it stops falling, that 4% yield looks really, really good and looks really attractive. And that's what's happening in the world right now. That is why bonds are these are yields, but that is why. Let's see if we can get bond prices up here. I'm going to pop up US 10-year bond. Just do the note. You'll probably see it yourself. And this is all on percentage basis, so you can't really see it clearly. Whatever. I mean, basically, bond prices are opposite to yields. So when bond prices go up, yields go down. So yes, everyone's plowing into yields, and they're plowing into, look at this baby, gold. This is it. They're plowing into gold. Gold prices, highest record highs in gold, parabolic move. The movement we have in stocks, the movement we have in gold, the movement we have in treasuries, the movement we have in gold, and the movement we have in stocks are all telling us the same story, which is exactly what you guys are all keying into, which is that investors are nervous. And, Ryan may be right, stocks are on sale right now, but they could be even cheaper. Good financial practices tell us to keep dollar cost averaging. That's going to work out. You keep buying when it's down, but this is not that down. I mean, if we were here, maybe, but it seems like there's a lot of room. And of course, I would never hope this to be the case, but there's a lot of room to go from here to here and still kind of be in a overall general, uptrend. So this is this S&P. With the NASDAQ, same story. This is a monthly chart. Even on a weekly chart, yes, we're down quite a bit, but, I would say real meaningful support would be over here. And then even if we would drop to that level, it's still, even if we drop to the top of this resistance level, it's still kind of general overall, still, it's not as if we had a huge crash all the way down to 10,000. So there could still be room to fall without it being in illogical levels. So yes, Ryan, you could be right, but I think many people here, including many people in the market, worry that it may get down to here, which is, somewhere around this zone here, and this bottom here, which would just take it to the next level of support. I mean, basically the next level of support in NASDAQ, the real level of support in NASDAQ is somewhere between these two lines, which is really far. I mean, that's 19,000 down to, it's like basically 2,000 points. So, I mean, that's a significant market drop, in my opinion. So as a result, U.S. yields are down. The dollar is catching a safe haven bid. The yen is catching a safe haven bid, and gold prices are soaring. So we're starting this conversation talking about all of these moves in the market and understanding that this week there's a lot for investors to be nervous about. There's a lot. I'm going to pin one of our other comments here. This that is absolutely correct. Dollar is rising because safe haven demand and Trump tariff fears. Yes, investors are absolutely very, very nervous. And they have a lot of reasons to be nervous until maybe well after April 2nd, which is Liberation Day. So with that said, this is when we start our trading week, and we look at, how to learn, prepare, and trade. We always, number one most important thing that trumps everything else is sentiment, how people are feeling. What's the vibe in the markets? And as we went through this exercise of looking at the markets and me asking you questions and you responding to me and giving me the right answers, I think we all agree that the markets are nervous, and they're very, very nervous for all of the reasons that you guys pointed out. April 2nd, which is Wednesday, is quote unquote Liberation Day. So what is Liberation Day? I mean, basically it is Trump saying this is when he's going to liberate the Americans from unfair trade practices. And investors are worried. They're worried about, how significant those reciprocal tariffs will be. Now, I do have to say, all of this could turn around, right? We have you even if many of you, and if you've never traded during Trump's first term, and this is you're only trading in Trump's second term, write the number 2. If you traded during Trump's first term, write the number 1. Let me know if you've experienced the Trump chaos, as Another Mutant says. 2 for you've only been trading in Trump term 2, or 1 if you traded during his first presidency. Yep, the majority of you saying 2, although some of you are saying 1 too. And I think even for those of you that are saying 2, you've gotten a taste of what's like. In the past, what is this? We're in March, right? And in the past 2 months, 9 weeks, I think. You've gotten a taste of what it's like. He could flip-flop at any time. So, that's perhaps a cause for optimism, right? He could flip-flop and say, people are bending to our will and they're seeing the tough strength that we're showing. And so we don't need to have such aggressive reciprocal tariffs. And he kind of suggested this last week. So while the markets are a mess, they could still fall quite a bit. We just talked about that. We talked about how, there's a lot of room to fall before we get to even this level of support here. And, in the general, it's still a overall uptrend. There's still room to fall. If he feels that that he doesn't like the negative, market sentiment around this, he could just say that it's going to be narrow tariffs. And if he says it's going to be narrow tariffs, this could skyrocket. Now, maybe one of the motivations for that could be this unusually close election in Florida, where the Republicans had held strong, basically replacing, I think, Waltz's seat. They're supposed to be winning, but it's unusually tight. If they suddenly lose, maybe he's going to think this is really a referendum on what I'm doing. I don't know. We'll have to see. But right now, everyone's very nervous about the April 2nd reciprocal tariffs. And that is only one of many things that are happening in the markets this week, this month, into the next quarter that's making investors nervous. So we have this. We have also in the news, Trump doesn't seem to be pleased with Russia. He's basically saying that he's pissed off at the way they're acting and how they're not willing to do a ceasefire. that is also making markets nervous and leading to a bit of rally in oil because you're thinking that maybe, there could be some oil tariffs on Russia. So a lot of moving parts. We have non-farm payrolls this week. We have ISMs, and we have the RBA rate decision. We have Eurozone inflation data. This is a week without the Liberation Day, without the April 2nd tariffs. Would have been a huge week anyway in the markets. And it's become much more market moving as a result of the tariff. So how do we trade it? Well, first off, I think, and of course this is speculation, the reciprocal tariff in the past, when we've had the tariffs set for a certain date, like the aluminum tariffs, pretty much at midnight they came out, right? They started. But right now we don't know what the specific reciprocal tariffs for each country, each part of the world, each sector, each region is going to be. So he's going to have to provide those details. Maybe he'll provide them tomorrow. I don't know. But chances are they'll come out maybe in the second. And so I think there's still some downside opportunity in indices, some upside opportunity in gold, as well as some further downside opportunity in euro. You got to be careful with yen though, because yen, while it's a risk currency, Japan could be hit with reciprocal tariffs as well. And if Japan is hit with reciprocal tariffs, there could definitely be a situation where yen ends up falling. So I think, like, for example, euro lower would be probably a better trade. Aussie and Kiwi are being hit, although these, have fallen quite a bit as well. CAD is big.
Hey, Kate, can I just chime in on the Japan comment?
Yeah.
Because this is just my own opinion, of course, guys, but I absolutely don't think Japan or any of the Southeast Asia, like Vietnam, will be hit with any kind of tariffs. As a matter of fact, you saw that there's a very disproportionate amount of tariffs attention to Europe and not so much to Asia because of very important security concerns. Japan is our number one ally in the Southeast Asia. So is Vietnam. China is our number one enemy. So I think Trump is not going to do it. At least I don't think so. So just my own 2 cents of how the whole thing is going to pop out. I'll get off now.
And another thing is that, Trump had his first conversation with Mark Carney. And can you believe it? He said that, a lot of countries are treating us unfairly in trade, but Canada is not one of them. I am blown away after, all of these tariffs and claiming that Canada is causing such unfairness. One conversation with Carney and all the math goes out the window. All the math goes out the window that you've done before. Hopefully, I've certainly done zero math, but all the math that legitimized your tariffs are now now Canada is no longer treating us unfairly because of one conversation with Carney. Clearly Carney's very skilled. If you don't know, he's the former Bank of Canada governor, former Bank of England governor. They loved him so much they shipped him to the other country, and they thought that, I don't know what you're showing, Boris. You got to take that off the screen. But they just from one, Carney is obviously very skilled. He's a very smart guy. The world loves him. He's got a lot of respect. He's clearly very convincing. And clearly he convinced Trump in one conversation that Canada is not treating the U.S. unfairly. So I think it's completely ridiculous, but that means that maybe the Canadian dollar may not fall that much. That maybe we may be seeing the CAD stabilize. Maybe Carney is going to be able to get some conciliations from Trump. But I was blown away about how he could completely change his stance on Canada after one conversation with Carney, when you would think that all these aggressive tariffs were well thought out based upon math. Of course, I don't believe any of that's the case, but based upon math and numbers, and then to flip-flop and say that Canada has not treated us unfairly in trade is just ridiculous. But it does suggest that Carney is doing the right thing. He's saying the right thing, and maybe we may not see additional weakness in the Canadian dollar. So my point is, what am I getting to? We've got the April 2nd tariffs coming up, right? I think that euro is probably at the greatest risk, just as Boris said. He's targeted the European Union, and the European Union doesn't seem to want to back down. So I think euro is probably very much at risk. Australia, New Zealand, proxies of Asia are also very much at risk. I still think the Canadian dollar is at risk, but not as much as before, because it seems like Carney is definitely, as DG says, he's found his match. He's very convincing, and probably the right choice for Canada right now. And then I still think the yen could fall, but I'm a little leery of this. I'm not convinced, because I think maybe Boris is right. And if he's right, that would mean dollar yen weakness. But even if he's wrong, I think the risk off that Japan does hit like with these auto tariffs, I think the risk off could still take dollar yen lower. So this is kind of the backdrop that we're walking into this new trading week with. So I'm starting with this because it is very important to, regardless of our fundamental views, in the longer term, to take into context everything that's happening in the week that could apply to the markets. And so these tariffs and where each country stands is very important. And to trade the tariffs, as I said, euro, I think, is probably going to be the most vulnerable. Of course, I'm going to disclaimer this and say he could change his mind at any point in time. I cannot predict him. None of us can predict him. But he can change his mind at any time. And, the markets could rise. But it clearly seems like he thinks, and Europe is prepared for the idea of that being considered a tariff. And if that's the case, and he plays hardball on the EU, I do believe euro is at the most risk. So that is something I'm very much worried about. So we have a lot going on. I told you that we have the ISM numbers. We have the non-farm payrolls report. What's really interesting is that the jobless claims numbers have been very, very low. But if we look at the calendar and we go to Friday, and we look at Friday, we have a Canadian jobs number and we have the U.S. jobs number. So on Friday, non-farm payrolls are expected to rise by only 139,000. I think you all will agree with me. There's been a lot of job losses, federal, leading to private sector as a result of consumer confidence falling, economies weakening, earnings slow down. Companies are going to be hiring a lot less. So this number could really surprise the downside, in my opinion. And so that is a serious risk. But what happens before that is all of the ISM numbers. Now, even though a lot of the data a lot of data is released by the government, right? Like jobless claims is released by the government, retail sales is released by the government, inflation is released by the government. But the ISMs is a private sector survey. It's released by the Institute of Supply Management. So it's not released by the U.S. government. So in many ways, you can argue that this is probably a better look at a more recent look at what's happening. So ISM manufacturing is happening tomorrow, is expected to drop into contractionary territory. And so, this is the first number to watch. Then we've got ADP, which is also not released by the U.S. government. So that number, watch out. We did have a very weak number in the last report. So there's expected to be a little bit of a rebound, but there is risk to the downside. And then on Thursday, we have the most important release, which is ISM services. And so market is also expecting a weaker ISM services report. You're not seeing my screen? Okay, thank you for telling me. Someone should have said this really early on. You guys had to let me know. I showed you my gold chart. I showed you where the support level is in the stocks, and no one said anything. Thank you so much, Atar. You are the VIP today for speaking up. Maybe you guys are so zoned in what I'm saying. You don't care about the charts, but you are the VIP for speaking up today. So yes, there is a lot of US data that could surprise the downside, but it's going to be a combo. It's going to be the tariffs, it's going to be the data, and we're going to have to try to trade our way through it all. One of the good things is that I think there should be a lot of flow and continuation. I personally, I think that tonight is Monday night. So, it'll be some clean trading opportunities tonight and probably tomorrow morning, unless we get a news bomb, which we always have to be prepared for. But I think that we're not quite in tariff headline mode yet. So I think tonight, tomorrow morning, we should have it. We should have data, and then we should have trading opportunities. So, I will be looking at my charts. I'll be looking to see if, there are any interesting trading opportunities on my zip charts. Euro right now is in the buy zone, which is interesting. So I'll be looking to see if there's any interesting opportunities to trade my zip setup, and in the charts, and see if, we can get a nice little move like over here when we had the zip sell signals, the white candles over here. So I'll be trading tonight. I'll be trading tomorrow morning. And then we go into tariff mode. So no trading for me. My trading plan is I won't be trading Tuesday evening, Wednesday morning. But once, Wednesday, we can get all the headlines. By Asia, we're going to know what's going to happen. There'll be some nice trading opportunities Wednesday night, Thursday morning, and then we go into NFP mode. And we're going to be live trading NFP with you on Friday. So make sure the link is already on YouTube. Make sure you join us for that. So in terms of the US dollar, my outlook for the US dollar is neutral bullish. I'm neutral because I think that a lot of the data could end up being weaker. And a lot of the data could end up being weaker. But I'm also worried about the tariffs. And I think the tariffs could end up driving the dollar higher. And that is why my heat map, I'm neutral dollars this week. I am neutral bearish euros. Inflation data will probably end up being softer. As I said earlier, we have inflation data tomorrow, I believe. Yes, inflation data tomorrow. So the German and the French inflation data has already been weak. And so I think that there's a very, very good chance that the national data is going to be weak, and that's going to be consistent with what we've already seen in the other reports. We also have some other data from Germany. I believe we have the the final revisions to German inflation data. I believe we also have German am I wrong? Like, I took my other calendar. I thought we had German. Let me check my other calendar. I'm not going to speak out of turn. I thought we had German. Oh, no, we don't. I thought we had German jobs data, but I guess not. So anyway, I'm bearish euros because I think the inflation data is going to be weaker. I think the tariffs are going to hit inflation quite hit the euro quite hard. Some of you are asking about RBA. We have the Reserve Bank of Australia rate decision tonight, I believe. Yes, RBA rate decision. Look here. No changes are expected by the RBA. Aussie, where's Aussie? Aussie, we're going to go to a daily chart. Clearly in the sell zone. Beautiful zip sell signal. But, we don't trade. This is Friday, so you're coming in Sunday evening. And this is around Sunday market open. We're in the sell zone. Aussie, if we look at the daily charts, is trading at its weakest level since March. So it's trading at its weakest level since March. Sorry, not March. Since March 3rd. So weakest level in a while. And the RBA, I did the RBA table. And so I like to do this table. Why is my screen not showing? Okay, let me reshare my screen. Hold on. Present, share screen, window. Okay, this is my screen. All right, so you should be seeing my table. So I create these tables for all of the major rate decisions because I like to, teach you all how to put yourselves into the shoes of the central bank, how to think like the central bank. So as a central bank, how do you think? You look at how data is doing and you get a sense of, whether it could be stronger or weaker, right? So looking at this table, since I've been talking so long, I want you to guess if you were the RBA and you saw this table and it looks like there's as much green as there's red, and green is Aussie, data that's improved. Red is Oz data that's deteriorated. Would you cut interest rates or would you leave interest rates unchanged? All right, this is your turn to shine. Give me your answers. Let me know. All right, let me see if anyone is typing in. No, leave unchanged, 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 unchanged. You're absolutely, I agree with you. Actually, no one's, I mean, I don't know if you're right or wrong. The RBA is surprised, right? But I agree with you. It seems like even. RBA cut interest rates at their last meeting. And while there's been a bit more uncertainty in the sense that they have steel and aluminum tariffs, and China has hit by tariffs, because they're meeting tonight before the April 2nd reciprocal tariffs, the best decision for them to make is to hold, like all of you are saying. You're so smart. I'm so glad that you guys are getting it, because that makes me feel really rewarded, because it seems like you guys are really starting to understand fundamentals. If it was a sea of red, there would be a strong argument for cutting interest rates again. But there hasn't, kind of retail sales is up. Everyone spooked us because of the second section, labor market. Yes, job losses have been terrible. There have been a lot of job losses, but they haven't really affected the rest of the economy yet. Retail sales was up at the last meeting. Consumer confidence is up. Building approvals are up. GDP, which is lagging, is up. The PMIs were kind of up. So yes, labor market activity is down. The market indicators like stocks and things like that are down too. But in general, it seems like it probably is smart for them to wait, which is probably what the RBA is going to be doing. So who was it that asked the question? Chris Howe. So I think the RBA is going to leave interest rates unchanged, which, tonight, which could lead to a little bit of stabilization in Aussie, although I still think they're going to leave the door open for additional easing. So they're still going to leave the door open. My kid is on vacation today. What are you doing? Probably just another 10, 15 minutes, honey. Okay.
I want to watch something in the living room.
Okay. Just maybe Boris could say hello for a minute.
Hi, guys. You want to take care of him? I'll walk you through this. Hi, guys. Yes, it's New York City public holiday. Fortunately, my kid is a little older, so she can amuse herself. Hi, guys. So yes, you can see that it's kind of a mixed, but I think lean bearish table for here. I don't know what the expectation is for the RBA on the charts here. Let me look it up. Just one sec here. But if I were kind of betting, I would say neutral, right, Kay? I mean, are you reading this as kind of a bearish, tilt bearish reading? Oh, wait, we don't hear you, Kay. We don't hear you.
I think they're going to leave interest rates unchanged, but say that they're prepared to do more. And they're going to leave a dovish, they'll be dovish. And I think they're going to, they're expected to cut interest rates again in May, I think, which would be the right timing, right? Because we would know by then what all these reciprocal tariffs are. We would know, how much damage is done to the markets. So there is no benefit for them to kind of front run this without all the information. So I fully anticipate them to be basically, so I think to be dovish. So right. I still think that I was
going to say, what's interesting about Kathy's table is you got to understand, I haven't looked at Aussie in like a year. I had no idea. All I did was just look at the table in 1 second. And as you can see, I was able to quickly ascertain exactly what the right position is. This is why her research is so valuable. She does all the hard work for you so that even if you are complete ignoramus like I am about the RBA interest rate policy at this point, you can get a pretty good read of exactly what the bank is going to be thinking. So
yeah, and we are constantly posting different things like this. This is a good opportunity to remind you all to join our trading community, because we're always posting things like this. I think earlier last week I posted about triple witching. I posted about how Trump is no longer expected to impose sector specific tariffs, things like that. We're always posting in our free community, so make sure you join this. We haven't even rolled it out prime time. We already have 1,000 members. It's just to our tight.
Yeah, it's been. I was going to say that we haven't even this has been in completely, what do we call it, soft launch, quiet launch. and we're already at 1,000 members without anybody really knowing about it. So yes, come on in. It's a great community. We're getting tremendous amount of positive feedback on it. A huge amount of free resources there, just a massive amount of free resources, and very, very inexpensive for you to just get the other upgraded resources. Take a look. Feel free to come in. It's absolutely free. And the coolest part is that a lot of the free resources, I mean, all the resources are mobile as well, but there's a huge amount of free resources that you can just look at on your phone, which is really great if you're ambulatory like all of us are, and moving around.
All of these are free as well. And some of you were asking about Zip and how it works. In the Forex starter course, I have all the videos on how Zip works. And so there's a lot more information. You can watch these videos. There's a lot of depth to it. You can download my Zip checklist where we went through today economic data, stocks performance, how yields are doing, basically what we do every single day when we look at the markets.
Yeah, and BFF, same thing. There's the full BFF strategy is there for you to look at, understand, all free. You can watch it. There's all 4K videos, super sharp. You can watch them all at your leisure. They're really good.
Yes. And Fred, I will be adding the live trading NFP to the community. We just put it up late Friday, so I didn't get a chance to, but there's like a nice little calendar of everything that's happening as well. Okay. So we talked about, what did we talk about? We talked about Euro. We talked about how I'm bearish Euros, and sorry, I'm going to put in my moving average clearance chart. And so we talked about how I'm bearish Euros, and how the inflation data is probably going to be softer. The tariff will probably be harsher. So I'm bearish Euros. Dollar yen, you just got to keep your eye on US yields. Dollar yen still looks under pressure, but this is a reversal candle, although I wouldn't make too much of it. But in general, I would just keep an eye on US yields, see how it's moving. We have some better Japanese data, and that is helping the yen with better industrial production numbers. But BOJ in no position to raise interest rates. I think it's all going to be based upon US yields. There's not much going on. I think we do have a little bit of Swiss data this week. Let me check the calendar. I think we have a little bit of Swiss data. We have Swiss retail sales tomorrow. So that's going to be important. Believe it or not, the market thinks Swiss retail sales is going to rise. I think we also have Swiss inflation data. So that's expected to be weaker. So actually, we have quite a bit of Swiss data. We have Swiss inflation data, retail sales data, and unemployment rate. So the three most important things for a country, which is labor market, inflation, spending, all coming out for Switzerland this week. And so most of them, in my opinion, is going to be weaker, leading to dollar Swiss rally. So a dollar Swiss does look like it's kind of bottoming, in my opinion. Dollar CAD, we talked about how reciprocal tariffs will probably hurt dollar CAD, but Carney seems to be had a really great conversation with Trump over the weekend. So I don't think he's going to be speaking to him again before the reciprocal tariffs, but this suggests that maybe he may have negotiated something better for Canada. So I don't expect as much CAD weakness as I do some of the other major currencies. Sterling, the UK also seems to have a quote unquote better relationship with Trump, but the UK definitely was affected by the auto tariffs. Personally, I have to say, I had to look up which cars were made in the UK. I actually didn't know. It was like Jaguar, Bentley, Range Rover, Land Rover. So, the expensive Aston Martin, Maserati. So the expensive cars where people could afford the tariffs are made in the UK. But still, they were definitely hit by the auto tariffs. But I think, as you can see by the quote unquote resilience of sterling compared to Aussie, Kiwi, Euro, that the pound is not being affected as much. And we don't have much in the way of UK data this week at all. The two currencies hit the hardest is definitely Aussie and Kiwi. And even though, and these are definitely below all of the major moving averages, so there's moving average clearance, which means that can get to a lower level. In our community, I talk about how to identify moving average clearance and how to, why it's so important and why I like to look at it all the time. So it is very important. And so we have moving average clearance. And so we could see further weakness in Aussie and Kiwi. And this is coming even though Chinese data was better than expected this morning. So I think that people are really worried about, these tiny little economies being affected a lot by what's happening around the world. And of course, Australia produces a lot of commodities, and that, they could be hit by tariffs as well. So, that's basically, the general outlook for the major currencies. In terms of the main events, we did already have some data, some of the more important data from Europe. The main events were going to be German retail sales, which was stronger, German inflation, which is weaker, and that's probably going to translate into weakness in the Eurozone data tomorrow. Australian retail sales are coming out. That's expected to be weaker, in my opinion, given weaker job growth. TANCAN, which measures Japanese business activity of big manufacturers, I think it actually could surprise the upside. RBA rate decision, that is always important. And then we have the PMI numbers. These are revisions. Eurozone inflation data will be the most important tomorrow, along with the ISM manufacturing report, and then overnight the RBA rate decision before that. And then we get into the April 2nd tariff focus. And so with the April 2nd tariffs, that's going to be the only thing that's really in focus on Wednesday. ADP will be interesting, but it's going to be all about tariff headlines. Then by the end of the Asia session, the dust will settle. We'll know what the takeaways are. And I think the cleanest opportunities will come from that. So I think it'll be really good trading opportunities Wednesday night. And then Thursday, we have ISM services. We're going to lead up into non-farm payrolls. This is going to be a very important leading indicator for non-farm payrolls. And then on Friday, we have the Canadian and the U.S. jobs report. So we're going to be live trading that with you on Friday. Powell's speaking 11:25, but we'll be done by then. So no, we don't need to worry about that. But we'll be trading non-farm payrolls with you starting at 8:10 on Friday. Make sure you join our trading community throughout the course of the week. We'll be prepping you for live trading NFPs and everything that's going to be happening. So make sure, you join the free trading community. And in terms of, Zip, I'll be watching Zip for trading opportunities there. It's the beginning of the week, so we don't have much, but I'll be posting any charts that seem to be interesting as well. So any questions for me before I turn it over to Boris? So Tammy's like, I love you guys. I want to upgrade to full, but as a Canadian, the exchange rate is super crazy. You can actually get most of what we do with our, where's this, the BK Trading community. You can get in our beginner bundle. We've tried to make this really affordable because we know the economy's not doing well, exchange rates aren't doing well. In the beginner bundle, you get access to the ZIP indicator, you get access to BFF indicator, you get access to our VIP live training, our heat map, as well as my economic data projections. The only thing you don't get access to is the trade alerts, but you get to learn how to use the indicator. We talk about them every day. I go through education. So it's only $75 a month, and it's a great place to start, I think. Ryan Littlewood made an interesting observation. Every day since Thursday, there's been gold buying. Liberation could be playing a part, so keep your eyes on the clock. I did not look and see if Thursday is gold buying day. It's an interesting comment. I will look into that. I don't know.
Gold has just generally been by the dip, just unbelievable. We clear 3. We now on the futures basis are at 3-1. So there is just very shallow retraces. Gold almost. I kind of half-heartedly said gold should only be a long-only trade, but honestly, that's really been a much better trade. As a matter of fact, every time I get stopped out on any of my scalps in gold, has always been on the short side.
So Fred has clarified. It's been rallying every day since Thursday. I mean, gold has been rallying. I would say every day, but it's relentless uptrend pretty much.
Gold is a really, really strong uptrend because of all this uncertainty and volatility. Gold thrives on uncertainty because when people don't, when fiat is all askew as we are now, because all of the geopolitical relationships are being upended by the Trump administration, people run to the one thing that they feel safe in, which is gold.
Yes. So, yeah. Also, I want to invite you guys to. We're doing a Q2 outlook later this week. I think it's when is it, Boris?
Oh, you're talking about wealth charts?
Oh, it's next week. Join our community. I'm going to post a link. We're doing like a Q2 thing. How to day trading strategies to master market chaos and volatility as a part of the wealth summit. I want to get you the link. Maybe while Boris is talking, I can try to look for you the link. You can.
Yeah. Oh, that's gonna be a really really interesting webinar. Also, for those of you, of course, who are trading a prop with me, Wealth Charts is fully integrated into prop, and I'm going to have a couple of really great surprises for you when we do this webinar. So come join us, because we're going to show you some very cool things. Because we're good friends with Wealth Charts, and they kind of that did some things that put us very much ahead of everybody else on the Wealth Charts platform. So there'll be a lot of fun stuff. There's going to be a huge amount of opportunities for those of you who want to trade prop via Wealth Charts with our help.
So what this is irrespective of what Boris is talking about in regards to Wealth Charts, they're doing a huge summit, I guess next week. And they're bringing in 60 speakers, all talking about the markets, all talking about what's going on. I wonder if I could just, bring up the website. You can, and it's completely free. We are speaking, what is this, wealth365.com.
Wednesday, right?
On April 9th, I put it in there.
A week from Wednesday.
Fabulous speakers here, all, giving their latest thoughts in the markets and stuff like that. So it's free. Sign up and join it, and join us on April 9th at 11 a.m. And learn from all of these great experts. I think 60 plus speakers, 6-day event, 50,000 people registered. They're giving out tons of prizes. So make sure you join the online event. We will be speaking on April 9th at 11 a.m. And we will be posting it. If you don't want to have to know everything that we do, we will be posting it all the time in our free trading community to make you guys all aware. Anyway, I'm gonna bid adieu, because as you saw, my little ones are at home and trying not to drive me nuts. I don't know if there's a replay, Stephen, of Wealth Charts.
Wealth Charts. I think if you sign up, I believe they give you.
I actually don't think so, Boris.
No.
No, I don't think they do a replay. Okay. So I would not say. I'm pretty sure they do not do a replay, because they want you there live. And so I don't know. Register anyway. You'll find out yourself, right? And so that's the best way. If they do a replay, you'll know. I personally think they won't, but doesn't hurt. There's no downside to registering. Okay, Richard told us if you pay them, they provide replays. So join live. It's free.
Right.
Yeah. But thank you, everyone. I will see you either in our VIP training if you are a member of our basic community. Otherwise, I will see the rest of you for live trading on Friday. So have a great day.
Coolio. All right. Thank you, Kay. Thanks a lot. Good morning, guys. Good morning. Good to have you with us. Live trading about to begin. We're going to do a little bit of review of last week, which has been a very, very good week. There's signals popping up right now that I'm kind of ignoring because it's the first 5 minutes of the open. So I'm going to let things float. But let's review how last week went. This is my trades for last week. As you can see, pretty consistent, structure. By the way, I always get reds on Sunday. I think it's because they're stub trades. The Monday trades have not updated yet, but I'm absolutely certain I'm up. I'll show you where I'm up on Monday. So the most interesting thing about the strategy that I've sort of distilled for you is these are the 5 things that I have done with BFF Scalper to get myself towards the target of getting funded, within 15 hours of trading. So it's what I mean by 15 hours of trading. It doesn't mean that, it means 15 hours of you devoting 15 hours of your time to trading, maybe over a week, maybe even over a month, maybe over a day. Depends how intense you are. You have a reasonable chance with the plan that I've designed to pretty much hit your targets for the $50,000 account. So that, let's say that works out 2-3 hours a day. For me, it's 5 days. In reality, I think it's probably 10 days. As always, in every business plan, you double the time and double the cost, right? But it's still not bad. If I can get you guys funded in 10 days, I don't think anybody's going to be complaining. Everybody's super happy. We've had like a great testimonials. This is just the latest one of our members, just showing how well people love the idea of trading 75% accuracy. As a matter of fact, I got to tell you, let's go back to this and just analyze. This is really the thing that I look at right over here. Look at this. Let me play with all my little toys. I have my this. Okay, look how cool this is. So this is really what I aim for. If we're somewhere around 90% profitable days, green days, that's all I want to be in green days. You have a very, very high degree of confidence that not only are you going to get funded, but then you're going to get paid out, and that you're actually on your way to becoming a good, consistent trader. That's really the game plan that I put together for everybody using BKBFF, scalping. There is a whole PDF that describes my whole strategy, my whole philosophy for how I want to trade. That PDF is in our, let me get out of here, in our free community. I'm just going to give you again, join link over here, and just literally when you get into our free community, just search 15 hours, and then you'll see, because that's the name of the PDF is like a full 10-page PDF that you can download, where it's step by step. But the basic idea here is that this is really the key thing. We wait for our signal, we wait for the candle to close, we enter on the close. Our whole philosophy is small targets, large stop, high win rate. You get those three things correct. Boom, boom, boom. Your net result is that you're basically over here. You are over here. Oops, let me see this. Remove at the stage. You are, the net result is hopefully that you are right there. If you do small targets, large stops, high accuracy rate, you're looking at this. That's what I'm trying to do. So, where am I right now? We got all the 6 charts going. Let's go through account by account, because I've actually marked all the trades today. Let's go from the 63 account. So this is S&P on the 63 account. This is the counter trend. I believe this is the counter. Yeah, this is the counter trend signals for gold and S&P. So, sell here, buy here. You can see I didn't do too much. Buy here, sell here, because obviously remember, these are counter trends at different points of time. So like two trades on the S&P. Gold was a little bit more of a challenge for me today on the 63 account. Where's my gold? So this one I got stopped out and still trying to, waiting to resolve this particular sequence, but I just put it on the side. The other counter trend on gold, nothing. Okay, so the next account, I'm going to go back from counter trends to trends. Trend account, which is the 64 account, 64 is the counter trend NASDAQ. So we're going to go to NASDAQ. So 64 is counter trend NASDAQ. That all has been very successful. Winner, couple more. Let me see if there was any more trades here. No. So that's $200 on the, maybe $300. $300. 1, 2, 3. Three winning trades on counter trend NASDAQ, right? Then the 65 account is trend S&P. That's always my bread and butter money. That's winner over here. You see me taking the signal here. Winner over here, me taking the signal here. Nothing going on right now, but could have taken this signal over here, but it was right before the 9:30 hour. What else did I do here? And then let's see if there was gold over here. And then we did the gold trend, right? Let's see, gold trend winner over here. Buy one here, buy, sell, buy 54, sell. This one is a winner. See, gold to the long side has just been money. Winner. Here's a sell signal again. I just passed up on right now because I just didn't want to do it. And then finally, we have 66 account, which is NASDAQ, gold, which is trend NASDAQ. And this is the 66 account. This is trend over here, So couple $100. So overall, you look like, I mean, NASDAQ looked like I made about $500-600. Gold and S&P looks like I made a couple $100. Basically, let's say $600-700 in just very early morning trades so far in all my stuff. The accounts, as we look at them, 66 is 51, 65 is 51.3. That's the NASDAQ. That's the S&P trend. That's my favorite. 64 is NASDAQ counter trend, and 63 is S&P and NASDAQ, excuse me, S&P and gold counter trend. Okay. So that's, that's where they are at. We'll stay on, let's say 66 just for now, but I'll flip around depending on how the signals come up. But a couple of things that I've done here, as I said, first of all, my rules that I follow completely and totally, which is my strict entry rules, depending on which account that I have. But the more important point, I think, beyond even that, is the very fact. Let me just get everything organized here, so we're all in sequence. So we have S&P, gold, NASDAQ, trends, counter trends, just waiting for signals. The much more important part is the segregation of accounts. I manage risk per instrument, per strategy, with the exception being that I mix and mingle gold and S&P, and that's only really for for your purposes. Frankly, if I was really trading myself, I would separate those two as well. It's just like, I don't want to put you guys through, like, we already have 4 accounts. I don't want to put you through 6 account switches. Although it's honestly, probably I should. Maybe I'll do that. Maybe I'll add a couple more accounts just to keep it proper, because I have become an absolute 100% believer in account segregation. And the cool thing is, as I showed everybody here, is that with Apex, it's not even a decision. It is so freaking easy to have multiple accounts. As a matter of fact, I'm going to make a statement. I wonder if people are going to agree with me, but I put the link in here in this. I wonder if you guys, who's going to agree with me. So here's my statement to you guys. You have a much, much greater chance of passing and getting funded with 5 accounts than you do with trading 1. Let me put the caveat to this. Not 5 accounts on Trade Copier. Yes, I know everybody does the Trade Copier, and there's lots of people in my room that are happy doing this, but that is literally 1 account leveraged to the hilt. So it's have a hunch, bet a bunch, get lucky, get paid out. I'm talking about skill. The ability to distribute skill across 5 separate or 6 separate accounts. Actually, it should be 6 separate accounts. It's like a portfolio approach. Yes, a couple of them may get blown out, but because the risk is segregated, a couple of them will sneak through. And if the ultimate goal is to get funded, just think about it. Because if you think about this, Apex basically gives you 5 accounts for the price of 1, right? So it's almost it's almost mathematically dumb not take advantage of that ability to distribute your risk across so many accounts for essentially the same price. That's what I love. That's why I love them as a partner, because they just make it super easy for people to manage their risk in a proper way. So I'm actually curious. I'm going to put this as our what do you call it? Go back to the charts. Look for signals here. Kind of slowed up a little bit. I'm going to put this as actually a question poll here, whether you guys agree with me, because, and I know many people here trade multiple accounts. So I'm curious if you think this is true. I'm absolutely convinced that it is. Where is this? Oh shit. I'm in the, okay. Hang on a second, guys. I have to, bear with me. I got to switch accounts. Bear with me. Okay, I'm in the wrong. Okay, now I can do this. All right, after like 5 years of streaming, I finally learned how to manage YouTube. Okay, so here's my. No, I don't want to do Q&A. I want to do poll. Let me do a poll here. So yes or no? Much greater chance of funding with 6 accounts versus 1? Yes or no? I'm going to start the poll. Those of you who have multiple accounts, chime in. Those of you who have an opinion, chime in. But I'm absolutely convinced that is the huge part of the secret sauce. Right. So Gallivan, I think that's an implied idea in my part. I know that everybody loves to do trade copier, one single trade through 1,000 accounts, which is a lot of fun, and I've done that 1,000 times. But not a sustainable strategy. I mean, maybe a sustainable strategy for some, but definitely not one that gives you the skills you need for life. Because the key thing that I think is that I'm trying to teach you guys is trading skills for life, not just let me just play around and pretend like I make $1 million as all these YouTube guys do. You can see that all we do is 100% real time, real trades, real markets. So that's why so many people who trade with us give me such really good testimonials, because I never solicit a single set testimonial. Every testimonial we're getting is literally just coming from people organically. And it's been a great thing as a result of it, So hopefully you guys like that approach. Good morning, Thomas. Good morning, everybody. Summarize. Take my trades, make sure I trade the triangles, only reds on the short, only greens on the long, wait for the candle to close, separate my accounts over and over and over again. Money, 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 money. And by the way, I started doing this in my personal accounts. And it's the beautiful part is that strategy, it works just as well. In other words, when you have a good strategy, it should work the exact same way on your real accounts as it does on your prop accounts. And it does the exact same thing. So that's really the ultimate goal for me, is that 1, get you guys funded, 2, get you trading and get paid out, 3, get you have the scalping skills for the rest of your life so that you could trade this. Markets go up, markets go down, we make money. I posted this yesterday in our, or a couple of days ago in our chat room. I said, markets, I see so many guys on the feed. Oh, I'm long. Oh, I'm short. I got squeezed out. I'm like, I don't give a shit. Markets go up, markets go down. All we care about is that we have some volatility. I mean, the only thing that frustrates us or that stops us, stops our action is this kind of a very, very quiet market conditions. But they always rev up, especially with Trump in the office. It's rare that it's going to be a quiet day. So we need just directionality. We don't care which way it is, because the signals are going to take care of that, and we're going to be able to take advantage of those. And ultimately, that translates into bank. No, so Rick, I've always said that trend signals are better than non-trend signals, right? The trend signals are better than counter trend signals. They absolutely have a higher degree of performance, but because now of the filter that I have in there, where I'm using the slope filter, the counter trend signals are also pretty good. They're still probably not as good. I mean, you see my trend accounts are higher than my counter trend accounts. It's just the nature of the beast, but not by much. It's not like, you can't do it. The more important part is to separate, just to give yourself as many chances as possible, because there could be right now, we're in a very trending environment. All these stock indices are going down. Gold is going up. It's a very, very clean, clear trending environment. So obviously any kind of trend signals are going to just simply be very accurate, but we could get into chop. And if we get into chop, the counter trend is really going to outperform. And the whole point is having multiple accounts, trading multiple variations of this idea. It gives you so much greater chance of success, in all aspects. What's the question, Guillermo? Does your system work in the evening when the market reopens? That's really, yes. So good news, guys. I'm going to try and do it starting tomorrow. It's going to, because we have coaching Tuesday nights. So Tuesday night, I'm probably going to do it late, but I promised you Asia session trade, babies. Tuesday, Wednesday, Thursday. Just because I can't do London. It just wipes me out. I can't do London trading, but Asia session trade, generally I'm going to try and do 7:45 New York till about 9 o'clock New York, like an hour and a half of when markets really open up. But on Wednesdays, it's going to have to be like 8 to 9 because we have private coaching. But yes, I absolutely want to do Asia. It's going to start this week. I'm going to do one more week, and then after that it's vacation time. So I'm going to be on vacation for a week. So we'll have intermittent stuff. But Australia, Asia, West Coast US. It's a little bit slower, but it's also a lot easier to kind of work the trades, explain the trades, trade the trades. You're gonna, I think you're gonna love it. And we're going to do the thing in Asia is we're gonna use CFDs instead of futures. We're gonna use the same principles. We're gonna use CFDs, and I think you're gonna see how well that works. So we'll trade that across gold. We'll trade it against Nasdaq. May even trade it on US 30. Because I think those, US 30, I don't know if, DAX is really, really funky, but I'll try it on DAX in Asia. And then, Bitcoin too, which is also that's going to be interesting to see because those spreads in Bitcoin are going to be a challenge. But we'll try and trade Bitcoin as well. All right. Counter trend in NAS, my first SIG here, 19 seconds left. So we're going to go to the counter trend strategy, which is my 64 account, and 6 seconds left on the long side, 3 seconds left. Let's see if this is going to be a legit trade. Boom. Long. All right, we're in it. Boom, boom. That was super fast. Order filled, and we're done. $100, less than a minute. My favorite kind of trading. So the key thing here is don't worry if you missed it, or don't worry if it was like super fast for you. You guys know that all of my trading is preset, right? In other words, it's a strategy, it's a system. I teach it to you. You guys want the full preset, the exact explanation step by step. Come to my coaching. I'm actually let me put up my coaching link over here. And I will teach you step by step exactly how to do this. But, a lot of you guys already figured this out. It's just configuring all the softwares so that it's just a click of a button and you're good to go. Is there a big, actually, no, everybody in my room who trades CFDs tells me absolutely not. The only difference is, spreads are a little different, but directionally it's the exact same thing. So no, as long as you're using BKBFF, the thing works on gold CFD as well as at gold futures. Directionally, they're all the same. Remember, CFDs are essentially derived from futures prices. So directionally, they're all the same. Major is asking me, we're going to do a summer session. You bet your ass we're going to do a summer session. Where are we? Oh, where's Majors? No, I mean, spring is ending at the end of April. But the thing is that, if you kind of join now on that link, you'll automatically, you'll get the summer session. It's just going to roll over. Is there any automation? No, my friend. The automation is just simply, it's quasi-automated. On the CFD side, there is a little bit of automation, but I'm very much against trading this on. If you want to lose money, automate. It's my number one advice to you. If you absolutely 100% want to lose money, automate this. Go ahead. If you want to make money, you got to put in the effort. Just because the computer simply doesn't know when to stop. The key thing about this strategy is you got to know also when to stop. You got to know when the news is. You got to know when a vol is. You got to know all sorts of shit that happens. You got to know how to step away from the 1030. There are so many if-then exclusions that for a human being is super easy. But but if you were to write it for a computer, it'd be a list of 100 exclusions that the automation is just not going to work. It's as automated as you can possibly be in terms of sequential, systematic approaches, but it absolutely requires. This is what scalping is all about. Thank God, because if this was purely robotic, and it worked, it would stop working, because then every robot would be able to copy it, and it would lose all of its edge. I use my own proprietary indicator, Jean-Paul. It's called BKBFF. It's available only for BK members, and you can join our group for free. And then within there, you can certainly get, just simply sign up for membership. It's really, really cheap. I just put the join in link right there. Here's the join in link. It's in the thing. So, choppy little markets, first half hour kind of popping around. I'm going to hang with you guys till at least 10:30 today. Let's see if we get a little bit of movement. I realized one of the key things, by the way, is that, we start every day 9:30, and actually 9:30 to 10 o'clock is the shittiest time of the market for all of our stuff. It's basically up and down, market trying to figure out which way it wants to go. And then around 10 o'clock, it really starts to take some direction. So 10 to 11 is really a fruitful time. A lot of times, frankly, even I missed a lot of those trades, because I get off with you guys and I do meetings and I'm away from the desk. And I really realized that a 10 to 11 time is just a very, very good time. Let's do another poll here. So everybody's saying to me, look at the results on the poll here, guys. 90% saying that you have a much greater chance of funding with 6 accounts versus 1. Even though, of course, I cannot spell for shit. Here's the 100% guarantee. Here's the one trade that is 1,000% guaranteed. The Boris will never be able to spell a complete English sentence properly, if his life depended on it. But if I could get paid for that, there would be no need for any other trading systems in the world. But oh shit! Now I forgot what I was going to ask you on the polls. Oh fuck! What were we just talking about? Oh, I know what I'm asking. What's the best? Sorry. Early onset Alzheimer's. What is the best trading hour for NQES? So it's just for indices, and I'm going to do. This is all New York time. You have to do this New York time, all right? New York time. So 8 to 9, 9 to, let's see what you guys think. I'm really, really interested to know what you guys think. 9 to 10, 10 to 11, or 14 to 50 on a 24 clock. New poll, guys. Let me know what you guys think. I'm curious. Can I talk about levels of membership? There's really only 2 levels of membership. There's the beginner bundle for $75, which gives you access to just the indicators. There is the monthly membership or the annual membership. The annual obviously gives you a much bigger discount, but the monthly and annual are the exact same things. And those give you access to the indicators plus all the trade signals, plus a couple of other, private webinars with me on Friday. And then there is a third option, which gives you all the monthly benefits. So every benefit of being a monthly trader, plus my coaching every Tuesday, strictly for prop coaching, called Pass the Prop. All the indicators, all the monthlies, Pass the Prop, everything, and that's actually a big discount to everything. That to me is the best deal. So like if you want to put your toe in the water, we call it the BK Pro membership. This is the one that you want. Pass the Prop Academy. I just put the link in there, and that gives you good access. So very quiet, guys. We got like 5 minutes of no signals. I'm just watching trades. Everybody's saying 9 to 10. Ooh, a lot of people betting on 9 to 10. Some 10 to 11. Interesting. Interesting at how you guys are trading. All right, vote in the poll. Oh, and all you guys on Twitter, let me post this on Twitter. Here's the join link for our community on Twitter because you guys are too fucking lazy to get over to YouTube. But definitely come join us. And within, by the way, the cool thing about the app is that all of my trading schedule will be on there with the exact link. So one of the great advantages of just joining the BK thing is that you don't have to ever wonder when am I going to be streaming. I put all my streaming right into the calendar, and it will alert you, when I'm streaming live. So it's another really, aside from all the stuff that we give away there and our whole strategies, it'll be good there. Do I get a better execution on Trade of 8 versus Trade of E? Fuck yes. Would that be the proper way to answer that, Rick? Maybe we should do a poll. Yes, maybe, fuck yes. My opinion is just fuck yes. But we'll talk about this too, that wealth charts is just as good. Like wealth charts is coming on board. I'm going to show you a couple of wealth charts is on there too. We'll talk about that as well. GFA says way better on Trade of 8. But yes. I totally agree. The cool thing though is that you can use wealth charts. Same idea. Press a button, get it done. That's where you want to be. You want to be at those that functionality. And as I said, I will be happy. I'm gonna a lot of part of coaching. Now that we really have the strategy all ironed out, there's just very, very little nuance to the strategy at this point. It's just it's bread and butter. Make a donut every day, sell a donut every day. Strategy. Now the real key thing is just execution. I'll be spending a lot more time on execution to help you guys refine the execution in coaching. It's a great quote. God, I love this quote from here. Let me see if I can pull this up. Let me go to my account. This is from Charlie Munger. I posted this yesterday. It was so smart. Where the hell is Charlie Munger? By the way, nobody talked. I can't believe Kay didn't talk about this. Le Pen has been convicted of embezzlement. She can't run for president. This is a huge piece of news. Nobody seems to give a shit. I'm totally amazed that this is not having a bigger geopolitical risk, but I think it will have some ramification. Anyways, this was actually, let's do this with this is a full magnifying glass. Everyone is trying to be smart. I'm just trying not to be stupid. Charlie Munger. I love this quote. I think this is the motto I live by. This is the motto we trade by. This is really the key to success. I just love this quote. It's such a good quote. It's so indicative of exactly what we're trying to do with our trading. So Fabio says, you got the passive prop, but in the Bay community, that tab has a lock. I'll look it up, Fabio, in the back end. And if there's a problem, I'll enable it for you, and I'll message you after the show. Okay, I'll double check to see what's going on over there. New platform, so obviously sometimes get some glitches. But yeah, what is this? Yeah, for 5 years. For 5 years for what, Cheryl? Cheryl is one of our lifetime members. So yeah, that's basically the story. How's I'm actually curious. How's everybody's? Have you guys started to really implement scalper the way I'm trading it? Have you started, really doing more and more of those trades continuously? And how's your experience been? What have been the issues? Let me know. We're a little bit quiet today. It's Quiet Monday. I think honestly, it's kind of going to be quiet. Tomorrow is the first, big event we have. Like, I think is a manufacturing, like data starts dropping starting tomorrow. So until then, it's kind of very quiet. So I'd love to share that GFA says with his own tweaks. If you guys are open to it, please share those tweaks, and I'll, in the comments right now, because nothing, I love more than people completely bastardizing my strategy to their own means, because generally it's going to be an improvement, or at least it's going to be a very interesting variation. A lot of other people probably would enjoy that variation. So, please feel free to share. I'd love to know what are the tweaks that you're doing. Some people are doing like multiple entries, multiple exits, longer stops and targets. All those things are really interesting to me. I'm curious at all the variations that you guys are doing. What is this? Fabio says, "Can you stop doing stupid things after a loss and just the signals? I think I'm doing much better." That's great. That's great. You're a Charlie Munger disciple. Yes, hit the NQ counter trade. Thank you. Where's the the counter trade right now? We just took that right now. Yes, we did absolutely do. It says boom and bust. I need to work on my mistakes and gambling instead of chasing the next trade. So, what kind of are you FOMOing? Are you like when you make an error, do you go large size on just a random trade instead of waiting for the next signal? Like honestly, the single best advice I can give anybody who is just FOMOing, right? Not that it's going to cure you, but it's definitely going to treat you. It's definitely the first step in treatment. Is you get stopped out. Don't go back into the market until you get an actual green triangle or red triangle. Don't fucking do a trade until you have a signal. Just do that. It may not always work, but I guarantee you it will work much better than you just going randomly off the charts. Do that, constantly, and you will see that just trusting that process is going to make it so much better. You don't take signal based on a tick chart or stochastic. So, how many ticks? 1,000 ticks, 2,000 ticks. I'm gonna make you give up all your secrets, GFOS. What's your tick chart configuration? A tick chart, by the way, is first of all only available obviously in futures because volume is not reported in CFDs. But a tick chart is how many times the price. A tick is when the price changes up and down, up and down, up and down. And it happens, thousands of times. And those charts are similar to, but not the same thing as time charts, right? So let's say 1,000 tick means, how many, where the price was at 0 tick and 1,000, and where the price was after 1,000 ticks. Is it higher up? Is it lower up? It kind of tells you similar ideas because if direction and volume are sort of similar, but not always. And tick charts is something that a lot of traders like to use instead of time charts. I'm completely indifferent. I think time charts work fine for what I need to do. To me, the most important part is that it must hold price in time. If it holds price in time, then I have a lot of confidence that it's going to have continuation in time. So that's my principles. And the stochastics is just simply a rate of change indicator that's similar to MACD or similar to RSI. And it's various variations. It has overbought, oversold signals, but it has crossover lines. Very, very similar, I think, to MACD the most. And so it sounds like GFOS is looking for a twist on a rate of change. He's looking for a change in rate of change, get in there a little bit earlier than I do, and run that trade a little bit earlier or later, depending on where the rate changes, right? He says that it made a huge difference in the win percentage. Interesting. Okay. So that's great. That's great. Do you have a Do you have a tick setting that you want to share with us? Okay, so Fabio, you're doing 2 contracts to essentially make it $100 trade, $400, $100 win, $400 loss. What size account are you trading? Because if you're trading a 50, you're flirting with disaster, my friend. I trading 50s, and every time I'm trading NQ at 100, it's always a little bit of a heart attack. I think that I am very comfortable trading $50 trades on a $50,000 account. I think you need to trade 100. I think a shortcut is $50 trades on $50,000 account, $100 trades on a $100,000 account or larger, maybe $200 trades on $200,000 account. And even then, honestly, because your risk reward ratios are so tight in all those accounts, I would be cautious in scaling up to that formula. But at least that would be the formula that does. You do 250 ticks in gold. Is that what you're saying? Is that 250 ticks? So it does 250 tick bars in gold, and that's good. That's good. So, oh no, he does $250. You do $250 all day. So does that mean you're doing 5 contracts? Oh, good for you. Wait, are you doing $250? You're doing 5 contracts in gold, which is again fucking huge. But on a 150, I guess it's okay. But I think he does something very different. Wait, so it's both 250 ticks and $250? So to make life even more confusing for all of us? Sorry, I got an ES trend long green, no trades. It disappeared. But we're getting back into trend more or less. So maybe we're going to get a signal in a minute or two. So it's both. You go for 5 contracts in gold, making $250 per trade, and you're using 250 ticks in gold with a stochastic to time those things, right? Is that yes to both? Just to confuse the fuck out of us? Yes, that's really great. That's great. Now, I assume, correct me if I'm wrong, so this is very important because when everybody shares their strategies, you really have to disclose everything that's going on, right? Why they do stuff versus how I do stuff. Okay, so correct me if I'm wrong. You just go for high win rate. If you lose, you lose. You're not looking to repair it. You're not doing what I do, which is if I lose, I'm going to go for large and just wipe out all my losses and put myself right back to my P&L level, right? Okay. But you are not, at $250 a trade, you're obviously not repairing a trade at a much larger position, correct? That's what I'm trying to ascertain that. It's very, very good. I'm glad that you're super close to to getting funded on 150. Because I want people to understand, because if they start fooling around with this and they don't know all the disclaimers, they're going to be in big trouble. Buck on the clock. Trend signal in the S&P. That's a 60. That's gonna be the 65 account. So we'll see if that holds, and then we're gonna go to that account and trade it if it holds. So just confirm to me that there's no repair, right? So that these people don't do crazy shit. Oops, the buy signal disappears. We got no trades so far. Now we get a counter trend sell signal, but it's yellow, not red. So when we're getting this kind of up and down, signal up, signal down, we know this is chop territory. That's always the first clue to us within the indicator that we're just in chop territory. Fabio says he's given up on that. That's fine. That's cool. I've actually gone down to 4. I've ratcheted myself down to 4 instead of 5. But I totally understand why that could be very, very tough mentally and psychologically. You really got to focus on that. That's my approach. But other people clearly, GFAS is just simply working the high accuracy. You're just working the high accuracy angle. You went quiet on me. Let me know. You do 4 contracts on gold using 520. So 4 contracts is $200 a trade. You're $250 away from. Okay, let's fucking get everything organized. You're trading $200 trades. You're using 250 tick candle bars, and you're $250 away from getting funded. Right? That's the truth of the matter. Right? It's a problem. It's like playing telephone when we're doing chat over here, and I getting people to this play. Yeah. So Fabio says he went bad 2 times up and you gave up. Yeah, you have to be very focused. The second time, when you do that second trade, you gotta do it hard. No, Jonathan, we're trading only gold, S&P, Nasdaq, just indices here. Not trading FX. You want to trade FX? You can trade that with Kathy. Kathy is really, really good at it. Let me give you the join link. She's the FX queen. She trades FX. I trade indices and gold, a little bit of crypto. All right, still watching. Nothing going on here. Everybody coming hanging out with me. All you guys on Twitter, please come on by to YouTube. This way you get to see all the links, because Twitter doesn't let me post the links up there. Yeah. So, but again, my question to you is, your first trade is 200. You don't do a second trade at 1,000. You just do accuracy, accuracy, accuracy. Right? Yeah. Well, last night was a great night. I was pissed that I had to, go to. So yes, thank you very much. I just wanted people to understand this so nobody gets confused and nobody does stupid things. I'm trying to take Charlie Munger to heart. So GFAS simply does BK signal with just high accuracy, large size. And that's why he's doing well. Like he's just winning 90% of the time. And he doesn't have to repair his stuff because he's so accurate on the first try that overall his P&L grows significantly. I'm doing $50 trades, he's doing 4 times my size. Every trade, if he does 20 trades, I'm doing 1,000. He does 4,000 a day, right? Just assuming every trade is a winner. So that's why he does so well. And that's a very legitimate way of trading. It's just not mine. I prefer to kind of do less and then give myself the chance to repair. But it's totally, totally viable. And it all depends on your style of approach and what you want to do. If you're receiving different signals than what you see on the chart, you're probably using the wrong month. Are you talking about? Most likely it's gold? Is that where you're getting different signals? Because gold now needs to be the June contract. Everybody's on June contract on gold, and it's got to be on a 2-minute chart, not a 1-minute chart. Just making both. Those are the very common mistakes. If your signals are off of mine, it's because you're on the wrong time frame and the wrong month. So make sure you're on the right month, which is June across the board. We're June S&P, June Nasdaq, June gold, right? That's the M month, and we're at the 2-minute mark. We're only on a 2-minute candle mark. Okay. If you're there, then you should be there. So NQ red. Ooh, NQ red on a trend condition. Cool. All right, let's do this. Got a trend condition in NQ, buck 10 on the clock. So we're watching this. Full minute on the clock. There's also, my favorite, sell signal on the S&P. I'm going to do the S&P first because I really love the S&P. Well, if I have time, I'll do the Nasdaq. But again, all depends. You love Nasdaq, go for Nasdaq. I'm going to go for S&P as my first trade. If I have a chance to time S&P entry, I will. If I don't, maybe I'll do the small maybe I'll do the small Nasdaq, just a tiny Nasdaq, just to participate in the trade, just to see how it worked out. There's also gold. Man, every fucking thing is showing up right now. So gold is in a sell mode. Wow, I didn't know. Gold is underneath the 200. Yes, gold is in a sell mode. So 13 seconds on the S&P, kind of iffing. Not a 5, 4, 3, 2, 1 sell. All right, short the S&P. No signal on gold. There is a small signal on NASDAQ, but we're going to go micro. Going to go micro on NASDAQ. The S&P looks like it's going to go against me big time. Jesus. The S&P not working. So let's go back to the S&P. Here's the S&P trade. And if it doesn't, I mean, this is why I always keep a pair in repair, right? I'll keep a pair in repair. I like that. Oh, did the NASDAQ get done? Looks like NASDAQ got done. The small NASDAQ got done. The S&P is still struggling. Targeting here would be 6150 on the target. So the irony of the whole thing is I love the S&P, and of course the one that gets done was NASDAQ. The NASDAQ trade only got done on the small one, but it got done nevertheless. So I'll take it. I'll take it. S&P, I get stopped out. Now this is where I really earn my money. Now I have to wait very, very patiently for S&P trend signal to appear, and then I'm going to try to repair that. Because this was the my first stop on the S&P in a while, but my approach is now I'm gonna wait very, very carefully. Maybe I don't know. We'll see how long it's going to take to try to repair that. Okay. And one of those things that what is this 1020? One of the things that will kill you unless you are mentally absolutely prepared for this, and you understand this happens all the time, is that this thing could go down like 5 points. It stops you out and goes in your direction. Absolutely possible. Volatility was high. I got retraced out. It's just part of the business, and you have to be completely. Oh, sorry guys, this was a counter trend. This was a counter trend signal. Oh shit. Okay, I took it in the wrong count. So that means now I'm gonna, if there's a trend signal here, I'm gonna take it in the trend account. Oh wow, that was it was just because this was very, very tight on the or maybe was it a trend at the time I took it? I already forgot. Doesn't matter. Do you repair just a counter trend S&P or any S&P? I repair both, but the idea is if I got stopped on trend, I wait for a next trend signal, right, to work this. So this is all like screwed up right now, honestly, because what I see right now is trend signal over here, right? What I take I took the trend right here. Here's this trend signal with 33 seconds left. But this looks like it's the first trend. This was a counter trend signal, right? And I made a mistake of putting it in the trend account. So I can't double up on I'm gonna have to go single position. And I'll wait for a true counter trend signal to kind of repair the counter trend trade. No signal anyways. It's 564. It all goes away. Let's see. No, it is. Okay, let's sell this. All right, in at 60.75 and targeting 59.75. Let's see if this can get resolved. Choppy price action coming back against me. Ugh. Not a lot of continuity today. So now this is a legit trend stop. So the next trend signal here, the next red signal, the next green signal in stop, I'm going to be focused on resolving this. And then I'll focus on the counter trend resolution if I get it. So let's see what goes on. Today is Monday Chop City. Typically these trades should resolve pretty solidly, and you can see it went like half a point my direction, and then it just did not go through. which happens, and it's that's part of it. So you have to just be very, very patient here. Look at this. Look at this. Now it's totally going to go and trade my way, but it doesn't matter. I have to just let that go. You can't. Oh, Marco, that's a good idea. Hadn't thought about that. That's a really good idea. He says, are you able to change the label color to see the difference easier between trend and counter trend signal accounts to help make it easier? That's a really good idea. I will. What should we make? What color should we make counter trend? So let's say trend will be yellow. What should we make counter trend? Should we make it like hot pink? What do you suggest? Give me some suggestions in the chat box. I'd love to know. Orange with white text in bold. Orange, okay. Orange is good because orange against yellow, that's a good contrast color. And we could try and do it with white, yeah. I'll update that for orange and white. We'll see how that looks. If it looks good, we'll put that up there. Or Miguel says white. White is also a pretty good contrast. So yellow and white, because white against a black background would work well in dark mode. But then in white mode, it just won't. So that's the only drawback. Okay. All right, maybe we'll keep it white, and then for the non-dark mode, we'll just turn it into orange. But it's definitely doable. All right, just waiting for some kind of movement to go. You see, the moving averages are totally compressed one against the other, and this is the most toxic kind of environment for us. So we just have to be careful, waiting for actual signal breakout signals for us to take place. We'll see how it goes. So interesting on the best trading hour for NQ and ES, it's kind of a push between 9 and 10 and 10 and 11. You guys are pretty much evenly divided for those 2 hours, which makes sense. And now we just gotta, look around and see it. So I think, yes, we'll work on those labels. We'll make it. No, I think I like the idea of labels. Let's not make it too complicated. Just changing. I think you're right that whenever I'm doing these things, it's always like from an engineering point of view, not from a design point of view. That's why I love your feedback, because then you should make it much better as a design point of view. But anyways, what I was going to say, the key thing that I wanted to the key takeaway here is separating the trades between accounts. This makes such a huge difference, both psychologically and financially. I got clipped twice in this account, and it doesn't really faze me because I'm still running all the other accounts. Every account is net positive. This one is just going to require more repair attention, but I'm not itching to do it because it's not a do or die situation for me. I will get it resolved eventually. So that's the really cool part about all of this. So super quiet. Let's do like 5 more minutes. If we get a signal, it'd be great. If we don't, we'll have to do this. All right, Dr. D is having some issues. So let me go to the trend mode, okay? I'm going to go full screen for you. Just it's not that complicated. We're going to go to, why can't I see the, all right, let's remove indicator and then add indicator. No, wrong one. Stupid. Sorry. Remove indicator, wrong indicator. Okay, indicators, BK. Where's the, oh, that's it. This one. Why can't I, where are the settings on this thing? What's going on with my settings? I don't know why my settings are not working right now. I don't know what's going on over here. But there's no, I'm not doing anything differently than you are. So I don't know what you're doing on this thing. I'll send you a screenshot later. Oh, you're using micro. Sorry, that's the third thing. So time, what's the other thing I was going to say? Month, and then micro. If you're using micro, you're going to get the wrong signals. You can't use micro. You can trade micro, but you can't use micro for signals. Okay, I have counter trend. So we're going to go to my counter trend account, which is the 63 account. 63 account on counter trend. Okay, $1.10 on this account. $1.10 on this signal. I'm going to trade this. And I have counter trend NQ. Okay, so we're going to try and trade both of those as we get into it. Let's give it a shot. 44 seconds. It's a lot of the counter trend on gold, counter trend on S&P, counter trend NASDAQ. So all signals kind of holding right now, 26 seconds. I'm going to try and do as many as I can. $16, $17, $11, $5, $4, $3, $2, $1. Buy on gold. So both NASDAQ and the NASDAQ ran away from me, so the NASDAQ is done. So they all got filled. Jesus, that was super fast. Holy shit, that was really fast. You guys see that? I guess everything got filled. Boom, boom, boom. So NASDAQ ran away. I couldn't do NASDAQ. So yeah, I mean that's great. That's great. That worked out nicely. Okay, on the counter trend side. I still have to repair the trend one, but I'm going to wait for the trend signal. I'll be very, very patient and wait for the trend signal, and then we'll work on that. But we'll keep working, and you see that it's preparation, execution. All right. To be honest with you guys, if I wasn't trading with you guys, if I was just trading myself, I would keep myself only to 2 instruments. And frankly, what I would trade is the S&P and NAS because I like those the most. I mean, gold is great, but I love the indices, and I love the movement in indices. Although some people just absolutely love gold, so it's just it all depends on what product you really, really love to trade. and that would be enough for me. Like, because obviously when you're trading three, it's almost impossible to do three at the same time, unless the trades are just not working. You could do maximum two at the same time, but all good. I mean, I'm not complaining. What's the question here? Oh, something is up. Oh, I got to take off your comment because you figured it out. Okay, good job. All right, let me wrap up, guys. Hopefully you had a good session. We closed up strong here. Let me give you all the links. So first of all, my friends at Apex, go get more accounts, because that is step number one to success, having multiple accounts. Number two, if you want to get my coaching tomorrow night. And then number three, if you just want to join our platform and have fun with it, all those links are there. So, excuse me. Thank you so much. Oh, I got a let's oops, hang on a second. Move at the stage. We do have trend signal. So where's my trend signal? Oh, trend signal just went away. All right, never mind. I got all excited for the trend signal. Okay, so I'll have to be patient. Again, the key thing here is just no signal, no trade. If this becomes a trend signal, I'll trade it, and I'll trade it at size. Otherwise, I'll see you guys tomorrow, as always, 9:30. Everybody really enjoyed. Thanks so much for hanging out with me. Another good session, a lot of good trades. Everybody take care. Everybody enjoy. Thanks a lot. Bye-bye.